Tesla Motors is offering to acquire SolarCity Corporation in an all-stock deal, valuing it at up to $2.8 billion. The proposal comes from the chairman and largest shareholder of both companies, Elon Musk. Joining us now to discuss the implications this deal could have on both companies is WSJ reporter Mike Spector. Mike, thanks so much for joining us.
Hi there.
Is this deal as incestuous as it sounds?
Well, if by incestuous you mean that Elon Musk, who controls both companies, is first cousins with the CEO of SolarCity, I guess you could make that argument. Definitely not your typical takeover plan. As you mentioned, he controls both companies. The CEO of SolarCity is his cousin, who's very excited about the deal. There are recusals here, so that other disinterested shareholders will be voting on the deal. But Tesla shares are getting punished today. Those disinterested shareholders are not immediately excited.
Now, what does Mr. Musk say is the purpose of this acquisition, and what do outside observers say?
Right. So Elon Musk's view, what's interesting is what he says it is for and what it's not about. He says the goal is to make sort of a merged company here with synergies that can sort of offer a clean energy pipeline with cars and powering your homes and batteries and solar power, all under the Tesla brand that, as we know, has rocketed in value over the years. The company is now worth $32 billion, even though it hasn't made a dime yet. And that's, you know, like $16 billion less than what General Motors is worth. He says it's not about the fact that SolarCity's stock price has declined. That's a more than 60% decline over the past 12 months, putting its value at just over $2 billion. As you mentioned, this deal offers a premium to that, valuing it up to $2.8 billion. But analysts also skeptical of this, think it will prove a distraction for Tesla and make it have to raise more money.
And yet we know that there are repercussions already. Tesla shares have tumbled 12%, while SolarCity shares have risen, have surged. So clearly there is some of that there. We know that SolarCity has been suffering, facing a lot of competition. Who are some of its major competitors? Well,
they have a variety of solar companies that they've competed against. And I mean, you can look at some over the years that just haven't fared well. There was a solar company a couple of years ago that filed for bankruptcy in the past couple of years. So very competitive space, and these shares are being bid up because it's viewed as a lifeline for SolarCity, that if you can get this company sort of under the Tesla umbrella, it's no longer in the public markets, it's Tesla's problem or great promise, depending on your point of view. That's what investors of SolarCity are hopeful for, and that's what analysts view it as. An Oppenheimer analyst actually called it a bailout for SolarCity today.
So where does this deal offer go from here? Obviously, shareholders have to vote. There are a lot of people recusing themselves on both sides. How likely is it to pass?
I think that remains to be seen. I mean, I think today is sort of a bad start for Tesla, with the shares being down and a lot of almost wholly negative reaction from the Wall Street analysts that follow the company and write on the company regularly. So off to a bad start, but that doesn't mean that this won't eventually go through. But the Oppenheimer analyst I mentioned says he expects a corporate governance situation here that will, shareholders will resist this, and this deal will run into trouble for corporate governance reasons. So
we could see that in the days ahead.
Some rough and tumble ahead, I think, for this one.
All right, Mike Spector, thank you so much for that.